Let me ask you a question. If you had the chance to invest in real estate with virtually zero risk of failure, would you take it? Imagine owning a piece of real estate where the odds are always in your favor, where every move is either a win or an opportunity to win even bigger. Sounds impossible, right? But listen, my friends, there is one type of real estate that's quietly outperformed the rest, delivering consistent, reliable returns for decades. No wild swings, no high-stake gambles, just steady growth. Now, most people overlook this simple real estate investing strategy because they're drawn by the siren song of high risk equals high reward real estate deals. The flashy investments that promise huge payoffs but rarely deliver. But today, I'm gonna reveal the most dependable form of real estate investing, a strategy so stable that it's practically foolproof. And my friends, this isn't just hype. I have the data to back it up. Even Warren Buffett himself has said that if he were starting all over again and wanted to build real wealth, he'd choose this exact form of real estate investing. That's how powerful this strategy is. So if you're looking for a way to build wealth in real estate without gambling your financial future, stick around, because by the end of this video, you'll see why this approach is the ultimate path to financial freedom. So let's dive in. Now, before we get going, my name is Ryan Dealey, and I've been in the real estate game for over 15 years now. During that time, I've seen it all, the highs, the lows, and just about everything in between. And my goal is to help you make strategic decisions to secure your financial future, especially when it comes to real estate. Today, I'm going to be sharing a secret that most investors overlook and most real estate gurus talk down about. But this approach, it consistently delivers no matter what the market is doing. So my friends, let's dive in. The first thing I want to do is help you understand the different forms of real estate investing. Let's start by breaking down the various types of real estate investments. Most people start off with commercial real estate. I want you to think about office buildings, retail spaces, maybe even warehouses. While these investments can yield high returns, the risks are equally high. Demand can be unpredictable, and long vacancies, they will drain profits literally overnight. So the next thing that many people think about is multifamily apartments. Now listen, these properties often offer steady income streams, especially in high demand areas, but they're management intensive. One problematic tenant can create issues that affect the whole complex. Plus, it's very difficult for one single individual to take down a full multifamily apartment. So one of the newest trends in real estate investing is vacation rentals or short-term rentals. Platforms like Airbnb have made short-term rentals extremely popular, but at the very same time, they are also very volatile and dependent on local regulations and seasonal demand. Maintenance costs are also much higher on Airbnb properties. And the last form of real estate is probably the one that real estate coaches recommend the most. It's fix and flip. It's when you buy low, you renovate, and you sell high. Now, this can be profitable, but it's also risky. Renovation costs can spiral out of control, and as the market changes, you could be left holding a property that you can't sell. But after all of this, there's one form of real estate investing that is plain, boring, and hiding in plain sight. It's called single-family home long-term investing. This type of real estate investment stands out because it's stable and it's dependable. Consider this, single-family homes have consistently proven to be the safest form of property investment that anyone can make. Now, if you want to know why, let's break it down right now. Single-family home long-term investing is literally a fail-proof investment strategy. First and foremost, single-family homes offer unmatched stability in the real estate world. Here's why. Beginning with consistent demand. Regardless of economic conditions, people always need a place to live. A single-family home fills a fundamental human need, shelter. It's part of Maslow's hierarchy of needs. Having a safe and secure place to live is essential, especially in stable neighborhoods with access to schools, jobs, and community. In fact, here is the compound annual growth rate for single-family homes over the last 50 years. You can see all the way from 1965 all the way to today that the single-family growth rate has been 5.4%. That's the compound annual growth rate. And what this means is if you bought a house and just held it, your value of the real estate would go up by 5.4% every single year. And that rate of return has been accelerating in the last 25 years. When you combine this constant demand with the chronic shortage of single-family homes, which the US has been experiencing for the last 20 years, my friends, you have a winning formula. Consider this graph right here, which highlights homes built by decade in the United States. Now, you can see if we go back to the 1930s and 1940s, we had 5.4 and 9.6 million homes being built every single year. From 1950 to 1970, we jumped up to over 20 million homes being built every single year. And then from 1970 all the way to 2010, you can see that the single-family home growth rate was booming, hitting above 25 million every single year. Then something really interesting happened on this graph, sparked by 2008. The home building in America dropped off and tanked like a rock. But on the flip side of this, population and demand for single-family homes has gone up despite ultra-low inventory. Now, the main reason for this low inventory is builders decided to start building multi-family living units rather than focusing on one home at a time. But the point of this graph is, for years, the US has underbuilt single-family homes, resulting in limited supply paired with consistent demand. Now, this unique combination keeps prices and rents not only stable, but growing even during economic downturns. Now, this brings me to the next point, which is market flexibility. Single-family homes, they're versatile. You can rent them out long-term, you can sell them when values appreciate, or you can even turn them into short-term rentals if market conditions favor that strategy in your area. Commercial properties that rely on specific tenant types, single-family homes appeal to a wide range of renters and buyers, making them adaptable to changing market conditions. The next point that makes single-family homes such a viable option is the low cost of entry. Single-family homes generally have a lower price point than large multifamily or commercial properties, making them more accessible to investors like you and me. This low barrier to entry allows you to get started sooner, to take on less risk, and to begin building your portfolio that much faster. This brings me to the final piece of the equation that makes single-family homes such a viable option. It's access to leverage. Here's a little known fact. Single-family homes come with some of the best financing options available when it comes to using leverage to buy real estate. The reason for this is with government-backed loans from Fannie Mae and Freddie Mac, a married couple can literally finance up to 20 properties with the lowest possible interest rates. It's kind of like a middle-class welfare check that makes it easier and cheaper to build a portfolio of cash-flowing properties. This is why I mentioned earlier in this video that Warren Buffett, if he were to build his wealth all over again from what he's been able to do in Berkshire Hathaway, he would use single-family homes and the debt available on single-family homes to do it. In fact, in this video clip, Warren Buffett said that a fixed-rate mortgage on a single-family home is literally the best investment you can make. Listen up.
What about now? People can get a mortgage for 3.5%, 4%.
Oh, you get a 30-year mortgage. It's the best instrument in the world, because if you're wrong and rates go to 2%, which I don't think they will, but you pay it off. I mean, it's a one-way renegotiation. I mean, it is an incredibly attractive instrument for the homeowner. And you've got a one-way bet. Berkshire can't do that. We cannot issue a 30-year bond and have it so we can call it off tomorrow at par. No way. And yet, you as an individual can do it. It's a great instrument.
For most people, their home is their most valuable asset.
Absolutely.
Is that the way it should be?
Should be for a great many people. If you know you're going to live in a given area, or think it's very likely, for a considerable period of time, and you've got a family, I mean, the home is terrific. The home I live in now, I bought in 1958 here, and I wouldn't trade it for anything. I mean, it's got all kinds of good memories. The kids, it's home to them, it's home to their friends. I mean, if you find a house you like, and you're going to stay in the locale for a while, buy it with a 30-year mortgage, and it'll be a terrific. It's good for a family.
How much of the home being a great purchase is reliant on being able to deduct your mortgage interest?
Well, that certainly is a factor. I doubt very much that they take away the interest deduction in the end. I mean, all of these things come up and they're so easy to talk about, and then you try and do it. Now you got every home builder and realtor and everybody in the country pounding on your door if you're a congressman. We'll see.
He later went on to say in this very same interview that if he were to build his wealth all over again, he would do it by simply buying up a couple 100,000 single-family homes. I want you to think about this for a moment. If Warren Buffett wanted to duplicate his wealth that he's built up with Berkshire Hathaway over all of these years, which as of today has a market cap of about $974 billion, Warren Buffett would achieve the same outcome with single-family homes, the most oftentimes overlooked, hiding in plain sight investment that you can make. A single-family home provides a tangible asset that is always in demand. It's easy to finance, and it's easy to sell if you ever need liquidity. But here's the key. Not every single-family home will give you these type of benefits. To make a single-family home work as a long-term investment for you, it boils down to three crucial elements. And it starts off with how you buy. In fact, one of my earliest mentors in the game of real estate told me that you make money when you buy. Now, I didn't fully understand this at the time because when I bought the real estate, it felt like that's when all my money left my bank account. But I learned that buying the right property is where the real profit begins. So key number one is buying in the right area. Location, my friends, it's everything. Seek areas with strong job markets, good schools, and low crime rates. Location, my friends, well, it's everything, and preferably with amenities that appeal to families. Neighborhoods with good infrastructure and growing populations are not only stable and hold their value over time, it also leads to an increase in wealth. Remember that compound annual growth rate. This is buying the right property in the right area. Look for properties near major highways, schools, and employment hubs. Now, if you want an extra edge in the game of real estate investing, I'm going to give you my secret strategy here. I want you to pay attention to migration trends. Where are people moving? Population growth, well, it drives higher demand, which pushes up property values and rental rates. Now, a simple trick that I like to use is check U-Haul migration data. That's it, my friends. Check U-Haul and find out where people are moving from and ultimately where they're moving to. And U-Haul reports on it every single year. This gives you insight into up and coming high demand areas. Now, my friends, this brings me to key number two, which is ensuring that you've got quality property management. Owning a great property is only half of the battle. In fact, to keep real estate truly passive, you need a strong property management. This ensures that your property is well maintained, that tenant issues are handled efficiently and effectively, and vacancies are minimized. A skilled property manager, they become your best friend in real estate investing. They keep things running smoothly, and they protect both your investment as well as your time. Here's the truth. Property management is the #1 skill required for financial freedom through real estate investing. It's the difference between real estate being a true asset or, my friends, a real headache. If you want to keep your investments passive, finding the right property manager and setting clear expectations is essential. So let's hit key number 3, which is buying the right property. Now listen, my friends, not every single family home is a great investment. I want you to look for properties in good condition with strong bones that offer the potential for appreciation and positive cash flow. Ideally, you want to buy a home that does not require extensive renovations, but still has room to grow in value. If you're interested in my property assessment process, check out the link in the description below for my due diligence video and my investment calculator. By following these 3 keys, buying in the right area, securing quality property management, and choosing the right property, you set yourself up for consistent success and long-term gains. Here's the final piece that makes single-family home investing nearly fail-proof. It's liquidity. When you enter the game of real estate investing, you go from playing checkers with your money to playing chess. There are more moves and counter moves and unexpected expenses that can impact your profits and your bottom line. And the real reason that people lose in real estate is they didn't plan for risk. And the way you prepare for risk is by maintaining liquidity. My friends, liquidity is having cash reserves that you can access in a moment's notice to allow you to navigate uncertainties that come up in real estate investing, especially when you're using leverage. Liquidity is the key. It's the key to navigating the curveballs that real estate is inevitably going to throw at you. Now, if you do not maintain liquidity, here's the thing that's going to happen. You will not be able to hold the property long enough to realize the profits that single-family homes will deliver when you hold them for 5, 10, 15, 20 years and beyond. Asymmetric upside means that your potential gains far outweigh any temporary losses, creating a win-win scenario for you over the long run. My friends, the game of real estate investing is actually pretty simple. Buy the right assets in the right area with the right property management and let time work for you. Liquidity is what gives you access to letting time make you wealthy. When you buy the right property in the right area with the right property management, you're setting yourself up for long-term success. Now, if this resonates with you and you're ready to explore how single-family home investing can be the foundation of your financial freedom, hit that subscribe button. Let's take control over your financial future together, one smart investment at a time. Real estate doesn't have to be a gamble. With the right strategy, it's a game that you cannot lose.